Well, thank you for the opportunity to present at this webinar. I think it's quite opportune. I remember last year about this time, there was still a lot of uncertainty. And as we were going into the festive season, everyone was hopeful that we would get a bit of a break from COVID, but then the country actually shut down. I think it was like a week before Christmas, and everybody's holiday plans were upended, and yeah, it was just a crazy time. But thanks for the Western Cape to the Western Cape provincial government for inviting us. I'm going to talk about the IDC funding for industry development, upgrading, and expansion and transformation. So Sean said that CIFA is the teenager when it comes to the development finance. If CIFA is the teenager, then we are probably the grandfather or the grandmother of development finance. We were established in 1940, so last year we were 80 years old. We couldn't have celebrations because of COVID, but I think that's quite an achievement that a government entity has been around for 80 years. What's interesting about the IDC is our mission since the IDC was established hasn't really changed, right? So our investment philosophy is driven by three things. First of all, structural transformation, and by that we mean is to structurally change the South African economy, originally from a mining economy towards more manufacturing and tertiary industries, because that's when economies sort of get to the next level, to the development level. The second issue for us is social transformation. To promote economic inclusiveness by supporting entrepreneurs and capital formation, specifically in previously excluded communities. Obviously, we know the history of the country. Some people couldn't participate fully in the mainstream economy, and the IDC wants to correct that as far as we can. And then the last important issue, and I guess this is an important issue for all organizations nowadays, it's got two legs. The one is, for us, financial sustainability, that the IDC can be self-sustaining, although we are a government entity, and obviously to facilitate investment and growth that contributes to mitigating the impact of climate change. So that's become an important issue increasingly in how we choose our investments and what we expect from companies when we invest in them. Just to add, we report to the Minister of Trade and Industry and Competition. We have an independent board of directors that basically governs how the IDC is run. And then we implement most of government's policies affecting the economy. I say most because perhaps there are one or two where we are actually the sort of influencer back to government to consider it, to consider a specific economic policy. So I just wanted to show this slide. Obviously, we are national. We've got offices in every province. In the Western Cape, we've got an office in Cape Town, and we have satellite infrastructure in George. It was at the CEDA office in George. But if colleagues are struggling to get a hold of anybody here, of anybody there, I'll put my cell number in the chat, and people can just give me a call. So if people can see here, COVID had a dramatic impact on our business. I just wanted to sort of, So COVID had a dramatic impact on our business. We used to do about 11.8 billion in funding approvals a year. Last year, it dropped to 5.6 billion. Not too bad given the circumstances, but it's 45% down. And a lot of our funding is targeted at creating jobs. It was 68% down because of COVID. Funding disbursed, this is where we actually pay out funding to industry. That was down 46%. We still managed to put 6.3 billion in the economy, nowhere near what we are used to. And then For BEE and Black Industrialist companies, we approved 3.9 billion, which was also down at 25%. So overall, COVID, as I suppose hit everybody, the amount of applications that came through during COVID were much less than previous years for obvious reasons. The shutdowns didn't help. With all the uncertainty, the economy is shut down and then it opened up and shut down. So a lot of businesses really didn't want to apply for financing. So a lot of this funding that we put out were for companies that were involved in producing the essential products for COVID, like masks and some of the medical stuff. And yeah. So where do we get our funds? So although we're a government entity, the IDC does not really get funding from government. I think we got funding the last time probably in the 1950s to start Sasol. So we generate our own funds. We borrow funds on capital markets. We've got a lot of investments where people pay out us dividends, and then we manage funds on behalf of other entities like the DTI, or it could even be foreign entities who have a particular interest in promoting, for example, entrepreneurship in the South African economy or green energy and so forth. So like I said, we get interest payments, and we have capital repayments. We get dividend payments. And obviously, where we invested in, if there's a capital growth in that company, in other words, the company has increased in value, we sometimes exit those investments and we use that funding to plow back into the economy. So how are we structured? Since this is more about small business, the small business finance in the regions where I'm sitting, we fall under the agro industry value chain. And yeah, so all our regional offices look at small businesses. And by small, because small is a relative thing, I suppose, not as small as what CIFA and NEF would look at, but we overlap a bit between the other two institutions. So for us in small business and regions, we look at minimum funding of R1 million and up to 15 million rand, 15. And if there are larger funding requirements, that we normally refer to our head office, and that goes then to the various value chains, like we have mining, metals, infrastructure, and energy. So if your application is in the energy sector, we refer you to the energy business unit. Manufacturing, we've got machinery and equipment and electronics, automotive, chemicals, textiles. Yeah, we'll refer you to those entities. But those are only for funding amounts above 15 million. Below 15 million and below, we will process the applications ourselves, irrespective of the specific sector you come from. Then, because we are national DFI, we perform all of the activities associated with DFIs. We do, obviously, development finance. We do a lot of research into sectors and economic research. We provide inputs into government policy. Then I spoke to the sectoral involvement in terms of the funding that we offer. We offer debt, equity, quasi-equity. We can look at short-term trade finance, bridging finance, guarantees, and sometimes we will provide wholesale funding to intermediaries. So our focus, like CIFA, is very much South Africa, but we have expanded, and we do look at projects in the rest on the rest of the continent, and we have funded a couple of them, but mainly larger projects. For small business, our focus is only in South Africa. Like Sean presented earlier, we also manage a lot of different funds. Like we have the Growing Youth Scheme for people 35 years and less, and these funds come at very attractive rates. The fund size there is 950 million rand, and the pricing is prime -2. Again, the minimum is R1 million and the maximum is 50 million rand. So I'm not going to go through all of these funds. Just to say, MSEP, we manage that on behalf of the DTI, more for sort of manufacturing entities. Then we still have economic distress funds available as well for companies that were negatively affected by COVID and are still trying to sort of get back to where they were before the pandemic. We can look at what their requirements and try and assist them. We have the UIF fund. A recent fund that was brought on board is the Agri-Industrial Fund. What is very attractive about this fund is that there's up to a 40% grant for qualifying enterprises, but the company must be a minimum 60% Black owned. And then the last fund here is the Agro Processing Competitiveness Fund. And this is also a fund to facilitate smaller business in the agricultural sector and agro-processing sector to get into the, or to grow their businesses sort of in the mainstream of those sectors. Quickly about our process. So when you apply to the IDC, it's not like when you apply to a bank, you fill in the form, you send it through, and then they say yes or no. So we do have an online application, but our assessment begins with face-to-face, either virtually nowadays. We can talk to you on Zoom or Teams, or we can meet at our offices. We then get we require sort of business plan, not a 100-page document, say a 5 to 10 pages telling us what you want to do, right? What we'll use that business plan for is to conduct a quick assessment if we can fund this, can fund your entity. If we determine that we are able to, we do a full due diligence. We then go to a credit committee. After the credit committee approves, you sign legal agreements. And once you've signed those legal agreements, we will disperse funding to you. Sometimes it's milestone based. We don't disburse all the funding immediately. It depends on the milestones of your business plan as well. So what we require shareholder management information, your background, skills, and experience. This is very, very important for small businesses. We want to understand that you do actually have the skills and capabilities or track record to, for a small business. We require financial information. We usually require audited information, but for smaller businesses, we now look at compiled or reviewed information. And if we're not happy, we may determine that we will want the information to be audited. But that we can work with you on that. Market information, I think Sean mentioned the same thing. We understand that, you know, your customers, the size of the market, where you fit in, how are you gonna sort of win market share, your competitiveness, your competition, and so forth. Technical information, very important. This is where a lot of small businesses fall down. What's your technical requirements? If you're a manufacturing entity, perhaps it's easy in clothing and textiles, but when you come to agro processing, say for example, setting up a juice manufacturer, there are a lot of issues to consider because there's, you know, because it's the food industry, there's cleanliness issues, you need the right certification. We need to understand where you are getting your plant and equipment from. Do you understand what you're buying? All those kinds of things